Hey, Kevin here, top 100 financial advisor, two-time author, one-time bestseller, and we are here to talk about the stock market. Today, I want to discuss share repurchases, also known as stock buybacks, what they are, why they're important, and why they tend to boost up the share price of a company. In this case, we're going to discuss banks because today the Federal Reserve announced they're going to lift some restrictions on bank stock buybacks or repurchases, which means that any company, but in this case, just banks, they're able to go back and start to buy up shares of their own company. In a way, you can see it as reinvesting in themselves. But what actually happens is they go out, just like me and you, not on a Robinhood though, but me and you say, look, we want to go buy shares of, let's say, Bank of America. Bank of America says, look, I'm Bank of America. I like Bank of America. I'm going to go ahead and go out here and buy more shares of my own company. Because of the size that they do these in, we're talking tens of billions of dollars at a time, in some cases, or at least hundreds of millions of dollars at a time. It actually helps boost the stock up and makes the stock rise. In the banking industry, 70% of the return that investors get is from share buybacks and dividends. So in the banking industry, this is huge. When the Fed announced, I think this was around March or so, when they said, look, banks, y'all gonna have to stop. Y'all can't do any buybacks right now because the economy is terrible. This is why Bank of America, JP Morgan, US Bank Corp, Wells Fargo, all of them really just tanked, just all terrible. And we actually kind of covered those. But that's one reason why. Now they're able to buy back their shares. And JP Morgan came out, I think today or maybe yesterday, said, look, we're already scheduled. We're going to go ahead and just buy back some of these shares at the beginning of 2021. So that means that bank stocks, like the ones that I've mentioned, you might want to put it on the radar. Now, personally, I'm not looking into bank stocks yet. It's just not my area right now. Now, a year and a half ago, or actually, end of 2019, they were on fire. Morgan Stanley, JP Morgan, I was making money left and right this time last year. Now, in 2021, at least the first quarter, hey, it might be something to look at, but there are pros and cons to stock buybacks, and I kind of want to discuss those. So number one, y'all know what I talk about sometimes when I discuss whether or not I'm going to buy into any stock. And a part of it is following the money. It's seeing where are the big banks buying, where are the billionaires buying, where are all these mutual funds and hedge funds, where are they putting their money? Because if I know that $500 million is going to go into this company, then my little $250, my little $1,000, whatever I'm putting in, it needs to go there too. Because if you get to ride the wave of $100 million investment, a $200 million investment, or in this case, billions of dollars, then more often than not, you're going to be right. And you're going to ride the wave as they pump more money into it. So if I already know that JP Morgan especially is going to do it, and a lot of these banks already do this as a practice anyway, it could be a good chance for you to get in. Now, the opposite side of this is this artificial, right? Like if you're just buying your own shares, same thing like at a candy bar sale when you were kids, or when we were kids rather, and you bought your own chocolate and you were like the highest salesman. Were you really the best salesman, or did you just buy back your own chocolate because you had the money? That's a question you could ask. At the end of the day, you sold the most bars, so I guess you won, right? So that's a part of it. But also, politically and socially, some people are not big fans of this, and I understand why. The reason is if you got, let's say, $12.7 billion, I'm using that number for a specific reason. If you got that money lying around, you could buy more, you could get more employees, you could train better, get better technology, you can hold it in cash for a rainy day like the coronavirus. Or you can buy back the shares and just kind of keep the money to yourself and your investors. So some people aren't really happy about that. And at one point, Congress was trying to figure out a way to kind of curtail those or end those or put some more strict limits to it. The reason why I brought up 12.7 billion is because of American Airlines. The entire airline industry had done this for quite a while. And I think it was between 2014 and 2019, American Airlines specifically spent $12.7 billion buying back or repurchasing their own shares, trying to boost up the stock price. The other side of this, on the con side, is that a lot of CEOs get paid based on how much the stock appreciates and how well the stock does, as opposed to how well the company itself does or how happy the employees are. So as a CEO, if you're running the company, you are incentivized, let me do whatever I can in the short term to make sure that the stock goes up. one easy way that you can actually control that, other than like providing good services and just being a good company, is let me just buy up my own shares, and you sell your own candy bars, or you buy your own candy bars. Therefore, you get that big check. So there's always a check and a balance there, pros and cons to it. But again, a share repurchase, a share buyback, they're literally the same thing. So when any company decides that they're going to buy back their own shares, it is a relatively common practice. By common, I mean there are most companies that do it at some point. I'm not sure if there are any that do it every single year, but the banking industry, again, this is big in their space. Now, the other thing that could be a good indicator, at least for the banking space, is interest rates are low. As you know, we've talked about this before, your interest rates on your loans and your savings accounts are going down and going to stay down because the Federal Reserve, the bank of banks, has lowered the interest rates to spur people to borrow more, start a business, use that capital and go spend it, and really kind of spur the economy. Interest rates are going to be low for quite some time. So in theory, and we'll see what 2021 has, basically these banks are like, look, I'm going to buy back my shares. So therefore, in theory, these shares should go up. Also, in a space where the world is going to open up again and rates are going to stay low, perhaps people are going to get more mortgages, right? Interest rates are low. You should go buy a house, is what people are saying. Also, you might as well start a business, or you need to go hire more people, right? Take out a small business loan. Interest rates are low, and that's going to help banks too. So the environment right now, as we know it at the end of December 2020, says that the banking sector might be a place that you want to look into. So personally, it's now on my radar right now. I told you what my list was yesterday, and at the time, I can only evaluate what's in front of me, right? So now that I known this yesterday, it might have been a little different, but we didn't know this yesterday. So this news came out today. So again, some things I would add to my radar. Will it be on my investors toolkit watch list? Perhaps actually finish that on tomorrow. Yes, the 30th. So it may or may not end up there. I want to do some more analysis and see if it fits for myself and for my students. But stocks you want to pay attention to: JP Morgan, US Bank. I would also add Goldman Sachs, Morgan Stanley in that list as well. You can throw Wells Fargo on there. You know how I feel about Wells Fargo. Bank of America, I haven't named them already. I think I already said JP Morgan. That would be, in my view, I would probably put, and maybe we can do like a comparison versus episode on this, but I would probably put, and this is just conjecture off the top of my head, so probably put JP Morgan at 1, then maybe maybe a Morgan Stanley, and then Bank of America, and then see who falls in after that. Again, I haven't put a whole bunch of money in the banking sector, and for good reason. I was in it when it was good. I hopped out before it got bad. So now it looks like it could be on the upswing for 2021. It's going to be a long year. We'll see where it goes. But I wanted to explain what a stock buyback was, what are some companies that you may want to look into, and then we'll keep an eye on it and see how things go. So before we end this video, number one, make sure, as always, housekeeping stuff, right? I should have said at the beginning of the video, I forgot. Hit the like button, hit the subscribe button, hit the share button. Most importantly, hit the share button, get this message out, because when you get rich, and I'm like, well, how did you do it? Well, maybe you should have watched that video that I shared a year ago or 2 years ago. Hey, there's your opportunity to do that right now. And number two, there is a very special thing that I'm doing with a few other top tier investors in this space. We're going to release something soon. So keep an eye out for it. If you're not on the email list, make sure you get on the email list. That's buildingbread.com/free. I'll put the link above, below, left, right, wherever you may be watching. I will make sure that you get it. So make sure you're on the email list. You'll see some stuff from me pretty soon. I'll throw a hint out there. Me, the investing tutor, that's Dr. Hans, Courtney, the Ivy investor, and 2 other very good experts are going to do a quick collaboration. So make sure you're on the email list. I'll let y'all know about it. We'll do a whole thing, but I'm just letting you know right now. So if you're not on the list, I can't help you. I cannot help you if you're not on the list. So make sure that you're on that. All right, that's it for me. I will talk to you guys later. Bye.